The Minority Market. Episode 67. How Price Moves Before News. Deep Dive. Most beginners believe news moves the market. They wait for headlines, announcements, and breaking updates, expecting price to react afterward. But the minority understands a deeper truth. Price often moves first, and news comes later as justification. This is not manipulation in the dramatic sense people imagine. It is a natural result of information flow, positioning, expectations, and behavior of large participants. Markets are forward-looking systems. Price does not represent the present moment alone. It reflects collective expectations about the future. Institutional investors, funds, and large participants continuously analyze data, supply chains, earnings projections, economic indicators, and sentiment. When their expectations shift, they adjust positions quietly and gradually. This positioning process starts long before any official news reaches the public. Imagine a large company about to report earnings. Insiders may not leak information directly, but analysts, suppliers, distributors, and institutional networks sense subtle changes. Production numbers, shipping volumes, management tone, sector performance. All these signals influence expectations. When expectations change, money begins to move. Price responds to money flow, not headlines. This is why you often see charts moving strongly before announcements. By the time news becomes public, most large participants have already positioned themselves. Retail traders then enter late, reacting emotionally to headlines, providing liquidity for smarter money to exit or rebalance. Another reason price moves before news is anticipation. Markets trade expectations, not facts. If good results are expected, price may rise before the announcement. When the actual news arrives, price may fall, not because results were bad, but because expectations were already priced in. This confuses beginners and creates emotional frustration. The minority learns to observe price behavior instead of reacting to headlines. Price shows accumulation, distribution, strength, weakness, and indecision. These behaviors reflect collective positioning. Learning to read price action helps you align with money flow rather than chasing news-driven emotions. There is also a psychological factor. News creates emotional spikes. Fearful headlines cause panic selling. Positive headlines trigger greed buying. Large participants understand this behavior pattern. They often position opposite to emotional extremes. This is why disciplined traders avoid trading based purely on news reactions. Another important concept is delayed public interpretation. News does not affect everyone equally at the same time. Different participants interpret information differently. Some react instantly. Others analyze slowly. This creates waves of buying and selling. Price reflects this continuous adjustment process, not a single event. Understanding this principle changes your entire approach. Instead of waiting for confirmation from news, you begin studying market structure, trend behavior, volume patterns, and reaction zones. You stop asking, "What happened?" and start asking, "What is price telling me?" The minority also understands that not all price movement is news-driven. Many moves happen due to technical levels, institutional rebalancing, portfolio adjustments, and algorithmic activity. News often arrives later to provide narrative explanation for moves that already happened. This is why chasing news is dangerous. By the time you react emotionally, risk is already elevated. Entries become poor. Stops become wider. Decisions become impulsive. The minority avoids this trap by focusing on preparation instead of reaction. Preparation means identifying key levels, understanding trend context, recognizing accumulation and distribution phases, and planning scenarios in advance. When news arrives, you already know where price may react. You are not surprised, you are prepared. Another deep lesson is humility. You do not need to predict news. You do not need insider information. You only need to respect price behavior. Price contains the collective intelligence of millions of participants. Learning to listen to it is more powerful than chasing any headline. Over time, this understanding builds emotional stability. You stop panicking during sudden moves. You stop getting excited by hype. You become calmer, slower, and more deliberate. This mental shift alone separates the minority from the emotional majority. Remember, markets reward preparation, not reaction. When you train yourself to observe price instead of headlines, you gain clarity. You begin to see the market as a dynamic system of behavior rather than a news-driven casino. This is one of the most important mindset shifts in your journey. Price leads. News follows. When you truly internalize this, your decision-making becomes sharper, calmer, and more professional. In the next episodes, we will continue building deeper understanding of behavior, psychology, and long-term consistency, the real tools of the minority.